How to invest in Epic Games. Investment advice is usually geared toward those with thousands or at least $1,000 to invest in addition to the standard 3 to 6 months salary socked away in a savings account. Most of us know how important it is to supplement our retirement with additional investment in traditional taxable investment accounts. Simply maxing out your IRA contributions and putting away 6% of your paycheck into the employer's 401 just may not do it, but not everyone has the thousands that most investment advice requires. Here is a plan developed with the ultra-small investor in mind. It takes just $100 every month for a year. First, it is important to prioritize your financial concerns. If you have high-interest credit card debt, do not invest until you are debt-free. While it is possible to make more money investing than you are losing on finance charges, it is highly unlikely. Your money is best spent lowering credit card balances. Also, if you have no cash savings, you should consider putting this plan off until you have savings equal to at least 3 months' salary. Finally, if you would be devastated if you lost all of the money you invested, you should probably stay away from directly investing. While not likely if you are conservative, it is possible to lose all or some of the money you invest no matter what the security. Open a brokerage account with a low-cost online broker. It's important that you're not paying more than $5 per trade, because that's money that will be coming out of your investment. Also, make sure that the broker you choose has no minimum account balance or fees will eat up your entire balance. For more about discount stockbrokers, you can visit our broker comparison chart. What you invest in is of course very important, and professional investment advice is too expensive if you're only investing $100. But studies have shown that the best returns come from widely diverse portfolios. Now, you can't easily have a widely diverse portfolio with $100, since that won't even get you one share of Google or Toyota. But exchange-traded funds make it easy to invest a small amount of money in a wide variety of securities because they are shares in a larger pool of securities. The Vanguard Total Stock Market Viper tracks over 6,000 U.S. stocks, and it's like investing your first $100 in the entire U.S. stock market. The iShares MSCI EAFE invests in stocks from Europe, Australia, and Asia. The iShares Lehman Aggregate Bond tracks the Lehman Brothers Aggregate Bond Index, and it's like investing your $100 in the entire bond market. If after 3 months you have put $100 into each of these funds, you will have a well-diversified portfolio that should withstand most of the market's fluctuations. Losses in any particular sector of the stock market should be offset by gains in other areas of the market. Add to it each month, never investing less than $100 at a time, and you should see the value of your account grow just as the stock market does. As you watch your investment grow, you should learn more about asset allocation and portfolio diversification, which are the keys to investment success. The more diverse your investments, the more you will be able to withstand volatile markets when stocks dip. Finally, when the total value of your investment reaches $10,000, you should consider seeking professional investment advice and transferring your holdings to traditional mutual funds, which are a bit easier to manage but typically have higher investment minimums.